Well, look, thank you very much for coming on. A bit of a crazy time. Really a brief introduction. So tell us a little bit about yourself, obviously what you do, and then we'll jump into really what's been happening with Trump and the tariffs over the last couple of weeks.
Sure. So Daniel Richards, Senior Economist at Emirates NBD. So I work on the research team there. I've been there 7.5 years. Pretty small team, kind of giving forecasts and commentary on local and global markets and developments.
So you told me off camera a moment ago that a lot of your team were actually off on holiday last week. And of all of the times to have some holiday where there was, I'd say, some considerable news, not the greatest time to have some time off. How has that been, trying to backpedal? And for anyone context listening and watching this, Mr. Trump in America has kindly said we're slapping on tariffs to the vast majority of the countries around the world, obviously, which has impacted lots of things. How have your team kind of dealt with that this week? And I'm sure you've been fielding lots of calls with how that may impact here and the wider region.
Yeah, for sure we have. It was a whole team as she was on leave last week. Obviously, we had the 2 days, then the rest of the week as well. So a busy start coming back, looking at all our forecasts again, all our assumptions for the year. We knew it was coming. We knew Liberation Day, so-called, was on its way. But I think the extent and scope of it, perhaps it wasn't quite anticipated to be quite as severe as it was. And I think that's been reflected not just in our not having adjusted our forecast, but the market reaction as well. It wasn't really expected. It was a lot more severe than was anticipated. So, yeah, fielding a lot of calls, revising everything, looking at everything. What does it mean for UAE? What's it mean for dollar? Big questions that we're all going to have to discuss over the next couple of days.
So what has changed? Because obviously, I think we can't make forecasts and predictions because things change throughout the course of the year. And but what has changed from the start of the year, where you've said, this is where we expect things to go in various different things, whether it's trends or GDP, with tariffs now in place, how do you expect this to impact this year for the UAE in general as a whole look at things?
Yeah, I mean, it's a tricky one because on some aspects it could be a benefit, and on others it's a negative. So for oil prices, if a massive global trade war ensues, if global growth is impacted, that would mean lower oil prices. We've already seen that feed through the past week or so, implications for budgets going forward. And then on the other hand, kind of the re-export trade presents the opportunity, depending how long this goes on for the UAE. If countries start going via UAE ports to export to the United States or elsewhere, then that could be a benefit. So it's just trying to kind of weigh up the pros and cons and try and find out what's the net, what will the ultimate outcome be this year. At the minute, we're still pretty bullish in terms of UAE growth this year. We forecast 5% GDP growth for 2025. Pretty robust figure. We compare it to the rest of the world, and I don't think we're inclined to change that for the time being, but of course, the downside would be if this escalates, this trade war doesn't find a resolution, more countries retaliate or respond in the way that China has said it has done, and you start to see that kind of escalation, which would have negative impacts for global trade and for global growth.
So UAE could be used as a kind of conduit, if it makes sense, because of the tariffs, so to allow things to be paid at less. You think there could be more, UAE could be more of a also manufacturing hub or somewhere where they could set up here if this were to go long term because of the 10% and bring business out that way? Because I looked at 24 GDP, correct me if I'm wrong here, but I know the first 9 months was 3.1%. Did we finish just shy of 4?
We're still waiting for
the figures. Okay.
Yeah.
So we're looking at more growth this year. When we talk about the oil, obviously we are $65 today on the 8th of April. What does that mean to the country and to everyone that's just living their normal lives? How can that impact, firstly, the country, the government, and then ultimately down to you and I that are living our lives and just going by as we do?
The lower oil price.
Yeah. What's the overall impact if it's sustained?
Yeah, I mean, there's a couple, I guess, in terms of the overall oil price. So for consumer, lower oil prices mean lower oil prices at the pump. For starters, we've already seen like the transport component of inflation has already been deflationary. Prices have been lower this year than last year for transport. That's around 10% of a CPI basket, the inflation basket. So that keeps that headline inflation level a bit softer. So for consumers initially, probably welcome lower oil prices. But a longer term lower oil price would also have impacts for long-term growth for the region. A lot of government revenue still comes from the oil sector. Lower oil prices, less money for government, which gives them less money to invest in those big projects, which are some of the main drivers or real stimulants of growth. And that we expect in the coming years, whether that's the new metro line, the new airport, and that has been the case for some time, right? Big government projects are a major driver of growth. If the lower oil price continues for longer than you anticipate or comes a bit lower than expected, then that would mean they wouldn't have as much in the government pockets, government coffers, to implement those big strategies. That would then have implications for a range of sectors, from consulting, construction, all the rest of it.
So over the longer term, we look at the oil prices. It could impact jobs, it could impact consulting, it could impact growth, it could impact the speed of doing that. What sort of trends are you seeing, or could we see this year in terms of the overall general macroeconomics of the region and certainly UAE?
As I say, we're pretty bullish on growth this year. Two reasons. Like when we forecast UAE GDP growth, we look at oil sector and non-oil sector. So oil sector is still fairly large proportion, not as important as it was decades ago. But
sorry to interrupt you, but when we talk about that split of the whole GDP, what is made up percentage-wise that is oil?
So it's around a quarter for the UAE. That is for Dubai is negligible, if at all, right? But for UAE as a whole, it's around a quarter. For Dubai itself specifically, then wholesale and retail trade is the biggest sector, around 21%. And then you have transports and logistics around 10%. So they're the key important sectors.
Where does real estate and tourism sit within that?
They're both a lot smaller than you expect, around 2 to 5%. Yeah.
Okay.
But of course, they facilitate a lot that goes on elsewhere in construction. Transport is huge. And tourism plays a role, or accommodation, hotels, restaurants and accommodation is kind of how we see it. So tourism specifically doesn't have a line in the national accounts GDP data. So we'd look at the travel component and the restaurants and hotels essentially to try and get a feel for that.
And sorry to sound very layman here, but perhaps some people watching this, what is GDP? What does it mean? What does it stand for?
Yeah, so it's gross domestic product, essentially everything being not manufactured, but produced by an economy, from services to manufacturing to, so you can measure it two ways, essentially, through by expenditure, which is a bit more, I guess, a bit more technical, if you like. We are looking at government spending, household spending, investment, or you can look at it by sector. So we tend to look at it by sector when we're looking at the UAE. So then it's everything that's produced by tourism sector, by manufacturing, by oil sector, and then aggregating that together to get a kind of total output for the economy. And then what we look at quite closely is the change of that year to year in a real sense. So stripping out price changes, inflation, to get a sense of how much more volume, if you will, rather than price change is being produced by the economy each year.
I would imagine the forecast of 5% for 2025 is probably country by country towards the upper quartile of, of countries around the world. What is, in your view, fueling the confidence that's really allowing that forecast, or certainly the GDP last year? What's there in Dubai or the UAE to think this is where we think the growth is going to come from?
Part of it is the government spending I mentioned, always big projects, airports.
So being really ambitious with that.
Exactly, and that kind of spending will produce more, if you will. So that's a significant driver. Population growth will impact GDP as well. That will prompt a larger economy. But the pace of population growth does appear to have slowed.
Really?
But it's still, because we look at, we don't have very detailed up-to-date census data.
No.
Right, but we do have the proxy indicators.
So what were we looking at roughly last year? Was it circa 200,000 or slightly less than that?
Around that, I think, yeah. And you'd expect it to slow, right? Coming out of the pandemic, you had those idiosyncratic factors of UAE positioning itself very strongly through the pandemic, making itself more attractive. The golden visa changes, all of that, conflict in Eastern Europe, changes in East Asia, all of those factors combined to prompt very rapid population growth. It was inevitable that would slow. And when we look at kind of like private school enrollments, for example, so last year 6%, up 6%, pretty strong.
Yeah.
Year before that, they're around 12%.
Yeah.
Year before that, around 12%. I think that's a really interesting one because that private school enrollments is people coming. I mean, not just coming for a few months for a temporary contract. They're coming and they're bringing their kids and putting them in school. So people are coming and putting down roots. And that will slow a bit inevitably, but it's still there. The government target is 5.8 million people by 2040. Mm-hmm. And it's very ambitious, but even part of that being realised would mean population growth continues. So that's another factor behind our bullish forecast.
On forecast though, if you looked at the average population increase pre-pandemic compared to now, is it a big difference? I mean, it seems from my feeling, it's significant difference from the amount of people joining the country per year versus now.
I mean, off the top of my head, I haven't got figures to mind, but I mean, you just have to go on the roads to know it, right?
It's a great barometer, isn't it?
Exactly. Yeah. When you have people coming out from like foreign banks or foreign businesses and they come for a business trip and they haven't been since 2020 or 2019 and they're astonished. It's so much busier. And even if you lived here through it, you still noticed it and you still notice it every day. So it's clear population growth clearly surged quite more rapidly. And I think you look at the economy as well, it's far more dynamic post the pandemic, far more enthusiasm, I think, far more going on than there was prior to the pandemic.
I can speak from, I've been in 17 years, nearly 18 years. More has happened proactively and positively from a government level in the last 4 to 5 years than the 12 previous for me personally speaking. And maybe it's a shift in mindset. I don't know, different, maybe younger officials where they're thinking a bit differently. But the golden visa is a huge unlock. I think people now are not looking at their situations every 2 years. They're looking at, Dubai is a bit of a longer period. And I'm really, really impressed. But what do you think's fueling the growth of Dubai real estate? And in your view, do you think it's growing too quickly? I've got an opinion, but do you think it's growing too quickly? Yeah,
I mean, the trouble is when it starts, in terms of prices, if it starts butting up against affordability issues, right? And then you kind of...
Are we seeing that?
I think you're just going to have to see people are going to be moving further out, essentially. Yes. That is what's going to happen. It's becoming a bigger city where population is growing. And you look at comparable global cities, business cities, you wouldn't necessarily be living in the center of Manhattan.
No.
Working a certain job or certain salary, you wouldn't expect to live in certain parts of London. And I think that's kind of what you didn't necessarily have previously in Dubai, where average white collar workers could perhaps afford to live downtown, one marina, those central areas. And that I think will continue to change, and people will be forced, if you will, or have to move further out into the suburbs or into more affordable areas. I guess the problem with that is that the transport infrastructure isn't quite there to the same degree that you have in those other cities where people are living further out in terms of easy metro provision, all the rest of it.
Coming back to the speed, are you concerned? Are your team concerned? I don't want to speak for you, but when I see 18, 19, 20%, I know for a fact that cannot continue.
Yeah, to be the period of time or the length of time that pace of growth has been maintained at, I think is really quite surprising. And I don't think it's particularly healthy either in terms of, like we were saying, in terms of affordability. It's just not sustainable to continue. And we would have thought that would have started to slow sometime previous. Never expect a crash, but certainly a slowdown from those kind of levels. And it's remarkable, I guess, that it hasn't happened. And I guess part of that is that population growth, that influx of people who weren't living here previously, I guess would explain that. But not necessarily a healthy long-term dynamic for a housing market, I would wager.
You'd normally link higher rates with declining prices, or certainly some softening, which hasn't happened. It's, if anything, it's business as usual. And you talked, or I think your team anticipates some movement this year, and things can change with regards to interest rates. I think it's commonly understood that maybe like at least a couple this year, hopefully, and again that can change.
Yeah.
Will that continue things, do you think, with price? Because that's, if anything, makes it more affordable, right, for people?
Yeah. Of course, a lot of people aren't borrowing to buy here.
Yeah.
But obviously you could have that money elsewhere. So it still makes an impact in terms of, even if you're not borrowing to buy, it still has a material impact of what you do with that cash, whether you invest it or not. So yeah, lower interest rates would normally be supportive of the housing market going forward. I guess the other thing would be maybe that population slowing, that rapid influx of high earners might tail off a bit over coming years, which might temper or keep that price gains a bit more level, and you might see a greater rise in average white collar owner occupiers, I guess, who might have wanted to buy for the last few years but were put off by higher interest rates, higher mortgage costs. If those start to come down, maybe that affordability for those kind of average workers might improve. Then.
I don't know if you have this data, but are the rates of typical salaries in line with, because it does seem like the increased salaries, increased of living in general in Dubai. I think the average increase in salaries is falling quite significantly behind that. Did you have that data, or have you seen that at all?
No, I mean, we don't have our own data on that. We do see the surveys in national press about kind of salary expectations and where they've gone, and I'd say, yeah, they probably haven't kept pace. I guess the thing to remember would be that, I mean, you'd know better than me, but for a long period from 2015, prices were falling. So inflation was actually negative. It was deflation here in the UAE for years until coming out of 2020. But so, I mean, if you look back, if you've been there that long, maybe it's just leveling out. But certainly if you moved here at the bottom at 2019 and every year you've seen a massive increase in your rent and you've not seen that in your salary, then you might start to question that long-term viability of being here. And anecdotal data isn't data necessarily, but you read Reddit or these conversation forums, and that's a conversation that pops up a lot, of course.
Are there any signs, aside from what's happened in the last week, which can be potentially a game changer, that the economy is cooling? Are there any indicators anywhere that have been spotted where you think, okay, this is maybe early signals, but we don't know yet?
Yeah, so as I say, we don't have a lot of timely data for UAE. We do have tourism arrivals for Dubai, which come out on a monthly basis. I think it just came out today. So January, February tourism figures. So I think January growth year on year is 9%, pretty strong.
Good, yeah.
January, February was 4% year on year.
Okay.
A lot of that seems to be a drop off in visitors from South Asia. So I think there's greater restrictions on Indian passports in terms of visa, and they're down 12% year on year. So that appears to be the driver there.
I wonder if the January data is slightly higher there because of that New Year effect, right? People coming travelling for New Year, and
that would be the same every year, I guess, right?
I suppose, yeah, I guess. Yeah.
So that should even out. But yeah, I mean, it's quite a mark. So the rest of the regions, it doesn't give by country, but it gives by regions. The rest have held up. Then there's a sharp drop off in South Asian visitors, which presumably is on the back of this more restrictive visa environment. So for hotels, maybe some of these visitors from South Asia would be more likely to be staying with family, perhaps, and maybe that won't have as material an impact if it was the same drop off in some other markets, for instance. But so that's one place we've seen a bit of a slowdown, but it's 1 month print or 2 months print. And then the PMI surveys,
which is what? Sorry.
So it's a survey that's sent out to a range of businesses throughout the UAE and Dubai, asking them the same questions every month. So, have you hired more people? Are you producing more this month or last month? Do you have more new orders this month or last month? Essentially, anything above 50 is a positive reading. Anything below, negative reading, contraction read. So they put all these answers together and give a composite index score. And so last month for the UAE, it was 54.
Okay.
So still solidly above the neutral line, but that's down from 55 the previous month, and it's the lowest reading in 5 months.
Really? Okay, that's interesting.
So a bit of a slowdown seemingly there, but
that's just consensus though.
Exactly.
Okay,
so that's survey responses. So it's a bit tricky. We don't always have the kind of detailed data you might have from the US. So kind of factory orders or retail sales, that hard data we don't have to the same degree. So we do make as much of a survey as we can because it will have price data, output data, but it is a survey. So it can be quite volatile, and you have to take that into account, I guess. So there are two measures that have seen a bit of a slowdown, but nothing particularly concerning, and it's only a couple of months. And you look at tourist arrivals last year, they're at 9%, 9.2% last year, following 20% growth or 19% growth for previous year. So, like we're saying, with how you expect a bit of a slowdown at some point, even just on base effects.
Yeah, but there's still growth, which is important.
Exactly. Yeah.
What else do you look at then? Because when you put together all of your reports, your forecasts this year, you're saying, we potentially expect up to 5% GDP. What data do you look at aside from the tourism, the PMI? Oil prices, what else is considered that we've perhaps not covered that kind of gets you to that grand number?
Yeah, so we look at the GDP trend figures, but we're still waiting for full year. But in terms of kind of the trajectory we see for various sectors there, investment figures, any new government spending that's announced, interest rate cuts that we expect, inflation rate, where do we see that going? Will consumers have more money in their pocket to spend? Kind of population, and then a bit of anecdotal reports or internal bank data, which whatever we can access in terms of that at least, and kind of put it all together and try and come up with a holistic view, I guess, that hopefully isn't too far wide of a marker.
Why is inflation, which has been very much a talking point for a lot of people, 18 months or so, why has it seemingly lagged here versus US, UK? We've seen quite huge spikes and then obviously gradually decreased over 12 months or so. Yeah,
I think a few reasons. One, energy costs. So a lot of the spike in the UK, at least, in Europe was on gas prices.
Because of Russia and
exactly. We had a very sharp spike in energy costs, which was in petrol as well, but also very markedly in gas for heating homes, which isn't really an issue here. So you look at utilities costs here; they haven't really changed. Yeah. Like electricity costs haven't really changed. Whereas in other some of those other markets you mentioned, whether in Europe or the US, that spiked very sharply. What else? Transport costs have been fairly come down since oil prices have come down. Labour costs or wage costs as well. That was one of the big drivers coming out of the pandemic in those developed markets, if you will. Workers
people demanding more, asking more.
Exactly.
As a whole.
Exactly. I think workers had a lot more leverage coming out of the pandemic, and then especially as the cost of living crisis ensued, they were demanding more money to pay for what they need for their heating. So that was another driver that kept inflation a bit stickier in those countries, whereas here you have a much larger potential wage pool, right? And people coming from countries where they don't have the same leverage in terms of their salary. So I think that kind of upwards trajectory on salaries wasn't quite the same here. And strong dollar as well. You've had that dollar strength come off a bit the last few weeks, but several years of dollar strength means it's cheaper for importing goods here. So there's a few factors. And you look at the components of the CPI basket. So what is lumped together to try and give a kind of indication of what the average person spends in a month. And obviously it's impossible to do exactly because everyone's spending varies, but they try and come up with an aggregate kind of measure. 40% of the basket is housing and utilities. I would say utilities didn't really change, so that didn't impact it. But housing inflation, that's running at 7.2% year on year. Yeah. You look at anything else, and it's either deflationary, prices are lower. A lot of firms have been cutting their prices. They look to maintain competitiveness in this competitive environment. And then oil prices are lower as well. So transport's 10% of the basket, that's been lower. So it's really only housing that's keeping inflation around that kind of 3% mark. Anything else, if you stripped out those higher housing costs, it'd be much lower.
you often see 2% as a target. Is that, are we in a world where 2%, how can I say, realistic these days? Or are we in a naturally, is 3% really probably the base mark that countries need to be working towards with inflation?
Yeah, I think 2% is probably like gone now. Yeah. It's hard. I think central banks are still trying to find that kind of R-star, that neutral level that they want to be aiming for. But I think the idea, you've seen how sticky inflation has been coming down towards that 2%. It's been more around the kind of 3% level, like you say, in the UK, in the Eurozone, in the US. And to get to 2%, I think they're going to struggle at the minute, especially we don't know what kind of impact these this tariff or potential trade war is going to have as well, especially in the US at least, which is, of course, what influences our monetary policy here.
The trade war, and it seems to be that Donald Trump wants the dollar to weaken for various different reasons. A weaker dollar, how does that impact here?
Well, two ways, I guess. If you're going home, sending money home, then there's going to be less bang for your buck, essentially. Most people here are expatriates. They do send money home. They do travel home. So that is one impact. But on the other hand, which is the same thing that Donald Trump is trying to do, if a weaker dollar is in fact what he wants, it seems to be fairly mixed messaging, that he wants it to be reserve currency, but he wants it to be weaker. But in any case, if he wants a weaker dollar to prompt manufacturing, then that would be a benefit here as well. So cheaper, it would make exports from here cheaper. It would make tourism here cheaper. So that would potentially make the UAE more competitive. Tourism's done very well the past several years, even with that dollar strength. And you compare it to kind of like the key source markets of British pounds, Indian rupee, the dollar has strengthened remarkably against those, but tourism has still continued to flow. If we start to see a weaker dollar, UAE prices cheaper, then that could give a boost to tourism as well. And any other, if they want to develop a manufacturing sector here to a greater extent, that could benefit as well.
Weaker dollar, stronger pound, or the dollar versus pound, you'd probably may see Dubai being more appealing to the UK buyers also, right? With things being slightly more affordable. We're actually having, more conversations now in the last few weeks where people are thinking, oh, wow, it's a fair amount cheaper than what it was several weeks ago. So that's very interesting. The 25% import tariffs, global, what effects could they have in general to the whole everything?
Well, a lot, I guess, depends how long they're maintained for, I suppose. But the market reaction we've had over the past week or so, that sharp drop-off in equity markets around the world, sharp drop-off in oil prices, people are concerned it'll be a big impact, especially if the kind of tit-for-tat retaliations continue at pace. China's come back and said they're going to retaliate. Donald Trump has threatened even further retaliations on that. If that same plays out the same way with other countries, like the EU is going to introduce its own retaliation. If it's then vice versa again with the US and this continues, then that's going to have a big dampening effect on global business.
Why is he doing this? Why is obviously I know you're not him, but if you like take a global, if you take his theory on globalization, why is this a thing? Why is he talking about doing this?
Yeah, so he maintains that the US isn't treated fairly by its trading partners, that all these countries have these tariffs in place already, or they put taxes on imports. Which means,
so hypothetically, an American car gets sold into China, for argument's sake, China would put a 50, 60, 70% charge on top of the value of the car to sell it in the country. That's what we're talking about.
Exactly.
Okay.
Yeah. So a few things. Like one, he seems to think that the money he gets from tariffs will give such a boost to US Treasury that he'll be able to cut taxes elsewhere. And then another is that through putting tariffs on, it makes it more expensive to import cars from elsewhere, then it'll boost US manufacturing. But if you're not importing goods from China, you'll make your own because it makes it more expensive. But the kind of tariffs he's put on some of these countries, they have barely or negligible tariffs in place themselves. So it seems to just be any country that runs a trade surplus with the US, he has gone for quite aggressively with tariffs. So Vietnam, for instance, has been hit quite sharply because the US imports a lot more from Vietnam than Vietnam imports from the US. But how do you rectify that? Because ultimately the US is a far richer country than Vietnam. The likelihood that Vietnam will start importing the same amount of goods the other direction is just, I don't see in any world that might happen. And if he doesn't want anyone to have a trade surplus, it kind of implies that essentially, like imagine you're having a builder do some work for you, and you have to do something for him. Like it has to be an equal, like 1-for-1 transaction, but you give him the, but like it doesn't make any sense. Right. Exactly. Essentially, it's almost like he wants to go back to bartering. Some countries will have a trade surplus with, and you look at the services balance, or the Facebook, the Google, or the rest of it, that's going to be a huge surplus with these other countries. But that doesn't figure into the conversation somehow. It's just for trade.
Very interesting times. The interest rates this year that we hope or expect to come down, how will that impact the UAE as an overall? Because obviously I know I think selfishly from a real estate perspective, but what are the wider implications as well as real estate?
Yeah, I mean, borrowing generally, right? Obviously, a big chunk of people's borrowing would be for real estate, but businesses as well. If businesses are going to invest for the future, they'll often need to borrow to do so. They're not just going to necessarily have the free cash sitting around. Corporate credit hasn't grown at a particularly strong rate in Dubai and the UAE over the past several years.
Because of the rates?
You would expect so, right? Because growth generally has been pretty good. Future path, the future trajectory or expectations of growth down the line has been pretty good. So you might expect businesses to want to borrow and invest for the future in that environment, but it hasn't really been there to a very strong degree. So if lower rates trigger more borrowing, more investment, then that could be positive for growth as well. More firms putting in for long term, creating jobs, all the rest. And similarly for household borrowing as well. Like household borrowing is going to be less if someone wants to buy a new car. If the financing is cheaper on that or any other big ticket item, then that will be easier for them to do as well. I guess the other implication, lower interest rates, potentially weaker dollar as well, which we discussed a moment ago.
Why would that happen? Why would lower rates kind of lead to a weaker dollar?
So essentially, if there's lower interest rates in the US, then there's going to be there's other factors that play into it as well, but less money going into the US to get the higher rates. So if you can then get a better return elsewhere or the comparative return elsewhere, then the money might go to another country instead, meaning less demand for a dollar and a weaker dollar, essentially. Like I say, we've seen that remarkable dollar strength for the past several years, and that might it's already started to come off the past couple of weeks for us on other developments. Yes.
When do you expect, and again, I appreciate you don't know everything about it, when do you forecast or expect for rates to make some adjustment before the summer, do you think? Because from things I've been reading, it would appear that there's conversations happening, whether it's now or certainly May or June,
Yeah. I mean, our expectation, so we have one cut, 25 basis point cut penciled in for the June meeting, and one in Q3, one in Q4. So 75 in total, which should take us to 375 at the end of the year. Jerome Powell, the chair, Federal Reserve chair, essentially the head of the US Central Bank, if you will, was speaking on Friday, I think. And he didn't, there has been some political pressure, comments from Donald Trump asking him or telling him to cut rates now. He hasn't seemed particularly inclined to do so. He was talking about the potential inflationary risk in the US from these tariffs. So we still think there are rate cuts to come, but I don't think he's going to be rushing into anything, especially. So the US Federal Reserve, we have two key mandates. One is inflation, the other is employment. And when you look at employment figures that came out on Friday, I think it was, it would have been on Friday.
They're pretty good work,
They're pretty good, like 220,000 or something.
There's actually no reason to reduce rates, but again, without getting super political, obviously there's some debt which is due to be refinanced this year, right, in the US, which debt is a big thing to try and bring down, and the lower rates makes it more easy for America to refinance.
But the central bank of US Fed is still for now independent. Obviously, there have been questions, again, not to get too political, but there have been questions about how it will withstand political challenges under this administration, if you will. But certainly for now, it is still an independent vehicle, and they should be looking at those two key mandates. Anything else shouldn't really be ultimately in their purview, right? They'll be looking at these things that, of course, could impact those two other aspects, but those are their two key mandates, and that's what they're focused on.
How the government or this government strike the balance between sustainability and growth? Because when we look at GDP in general, I would probably guess the government spending contributes a fair amount to growth in general, which even in America, it's amazing how much money the US government are spending to contribute towards overall growth. How does this government strike the balance between grow, and actually knowing that, no, we need to run at a pace where in 10 years' time we're not in big trouble, or we're able to grow at the pace that our population and what the country needs?
Yeah.
That's a big question there.
Yeah, no, it is a big question. Yeah, I mean, the pace of growth here has been very strong for a long time, right? But I think at the minute, there is a acknowledgement that the oil economy will eventually, it will become less and less important, and they need to diversify as quickly as possible.
Yeah.
So I think it's a bit of a different dynamic here in the UAE and in the wider GCC, where they kind of need to front load a lot of that growth to get them in a position to have the infrastructure in place, to have the investment in the new technologies, new industries, the AI investment, all the rest of it. That kind of has to happen now in a way. They need to front load it to get ahead of any eventual drop off in the oil economy.
Crystal ball. I'm not going to ask you to get your crystal ball out, but slowdowns ahead at some point. All property markets, all economies don't do that.
Yeah.
When might it happen? When will the figures suggest that it's ahead of us? I mean, and really, another question to that is, what are the factors that could contribute towards a softening? I mean, I've talked on camera, and I don't want to answer this for you, but obviously, more supply coming to the market could contribute towards that. What else? And when?
I mean, it's always, like you said, it's always supply demand, right? So more supply coming to market, and that kind of population, that pace of that population growth starting to soften off as well. We don't have the kind of detailed data on how many people are end users as well, how many people are, as an investment, if they start to see more attractive, or as they might see it, less risky, if investors start to see it like a kind of a tail off or an end to the party coming down the line, and people start jumping on that bandwagon, then I guess that could prompt a bit more of a slowdown as well.
So what narrative controlling that rather than the actual numbers?
Yeah. But as I say, for the time being, population growth for the size of the economy, if it was 200,000 people last year, that's a lot of people coming in, right? They do have that target of hitting 5.8 million people. They do have a lot of investment going on, new businesses setting up here all the time, and not just in Dubai, in Abu Dhabi as well. I've seen even like non-oil growth in Abu Dhabi might not get talked about as much, perhaps, probably just because we're in Dubai, but it's been running about twice the pace that we've seen here, and some very strongly expanding sectors like financial services and the like.
Yeah, and ADGM, what they're doing down there is phenomenal.
Yeah, exactly. So there's a lot of positive stories still here in the UAE. I think we should be supportive of the market for time being, but yeah, like you say, it can't go like that forever, and it's not healthy for it to go like that forever.
It's a fantastic politician's answer of saying when the market's going to go down. I mean, look, reality is I think we both don't know, and people ask me all the time what's going to happen. I think the fundamentals are that right now, me speaking anecdotally, when there's not huge amounts of actually properties that are available with a key, open door available per community. So more inventory in the coming years, very much welcome from my perspective. And I think what will happen with the marketplace. But I think anyone buying long term is always the view, right? Yeah,
exactly. Have it, well, a lot of people invest in property here and have done very well. But for people buying as a home, and if you're staying, then I don't think it's ever really something to be too concerned about in any case. So it depends on the reason why you're investing, I guess, the reason why you're buying property.
Amazing. Well, really appreciate your time. Thank you ever so much. I know you're a busy man. Certainly the next few weeks, you're going to be going out. In regards to moving forward and people being able to keep an eye on things, how often do your team produce reports, and where can they be seen?
Yeah, I mean, we put out a daily update every morning where we recap anything that's happened in global markets, but also locally as well. So if there's any local data or any local news in terms of new investment, that will go out and on our website.
How can that be found? Is that via the bank itself?
Yeah, so enbdresearch.com.
Yeah.
For a minute, I mean, there might be a firewall coming down the line, but the minute it's open. So anyone can go on there, see our daily reports. And also we have more thematic data on there about UAE trade or UAE analysis, GDP, commodities analysis, oil sector, real estate. All on there.
What as we're coming towards the end, what is it, just out of interest for me really, what is the lag you deal with in terms of the time something's produced? I know it can change from different things you're dealing with, but when I speak from my perspective, the land department data and what we deal with, so a sale done today, it's normally around 4 months, give or take. Is it a similar thing for you, or whatever happens there and then the data just come at a later point when it?
There's quite a lag, and it's not a predictable lag either in many cases. It's not like you can rely on the GDP print to come on this date of the month following the end of the year, for instance. It'll come when it comes, and often we don't know when it will come. And it will be something of a lag, especially when you compare it to some other economies. So.
I know you're not an accountant, but how does corporate tax impact the overall economics, GDP growth? Obviously, we're going to be paying our first lot this year, which is lovely. Not been used to that, but it is what it is. Hopefully, it will benefit the wider economy. What is that factored into this year at all, or is it not really a thing it's too soon to talk about?
I mean, it hasn't really materialised in inflation, at least. As saying, firms tend to have been cutting their prices charged.
Let me tell you now, I've seen inflation in the auditors. My God, wow, there's a big inflation there.
So maybe not the impact there we thought it had. And part of this was getting ahead of a global tax agreement that was coming in, right? But under the Donald Trump presidency, the likelihood of these kind of big global tax agreements making any headway now, I think, are far diminished from what they were under the previous administration.
Do you know, under a Trump presidency, obviously what we do get is we get chaos. I know there's probably some good underlying, how can I put it, outcomes, but do you think a Trump presidency slows or makes decision-making with the country or the city a little bit more cautious because you're thinking, we don't know what we're going to get in terms of how we make decisions because of how he operates?
In terms of what, so the UAE?
Yeah, let's say, for example, things can change overnight. You don't know, we don't know. Are you a little bit more wary as a rule of the country that, the decisions you make have got to be a little bit slower to ensure that you're not caught short-handed with him as a president?
Yeah,
we're reliant on the US, right?
Yeah, it's hard for any country to deal with this kind of mercurial president. You don't really know what's going to come day for day. I think what's striking for us, looking at the developments of the past few weeks, is how different the strategy of the Trump administration is to what we've seen from the UAE over the past several years. So the UAE has been going out there striking these CEPA agreements, these comprehensive economic partnership agreements with countries around the world, so like Costa Rica, Congo, Cambodia, all over the place, to try and get that frictionless trade. And the UAE is a small trade-based economy. It benefits from that. And I think they've done very well. I think imports, exports are covered around 40% and 25% by these free trade agreements now. And it's just striking how different a strategy that is to what we've seen coming out of the Trump administration. And I wouldn't expect the UAE to make any change to that because it's doing very well for them at the time being. So this is a question of trying to improve and vary your trade agreements around the world. I think that's a strategy which lots of countries are now coming to, and hope that you maintain good relations with the US as well, because ultimately it's the biggest economy in the world, it's the most important economy in the world, and you need good relations as far as possible.
Daniel, your job absolutely fascinates me. So, just thank you very much for you and your team being able to kind of allow us and certainly people in Dubai to be informed and know what's going on. And obviously some of it might go over some people's heads, but it's really interesting. And certainly hearing what your team produce gives me, as a business owner, huge confidence with, the outlook of Dubai. So thank you very much for your time, mate.
My pleasure. Nice to meet you.